Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat and not Buy Now Sell Now. I have today my Buy Now Sell Now co-anchor, that is Shrishti Sharma. Very good afternoon to you, Shrishti, and let's take a look at what the markets are doing at this point in time. The markets are pretty much subdued, like the way we actually started the day off. If you look at the benchmark indices, still in the negative territory. Nifty Bank still underperforming the benchmark indices. You have a slew of companies actually reporting its earnings. Flashing on the bottom of your screen is Dhanuka Agritech and numbers. We'll have the management of Dhanuka Agritech join us shortly to talk about their earnings and the way forward. For now, if you look at the numbers, good set of numbers coming in. The revenue has seen an uptick of about 13% year-on-year basis. The PAT has seen an uptick of as much as 40% on a year-on-year basis. And you can see the stock doing cartwheels as we speak. 8.8% uptick coming in for Dhanuka Agri. And not just Dhanuka Agri, you have Uno Minda, Info Edge. These are some of the counters that came out with their earnings short while ago. You have Venky's that posted a profit versus loss, and on back of that, the stock actually saw an uptick of as much as 9% or so. Right now, if you see, the stock is trading with gains of as much as 3%. Nevertheless, good performance or show of performance coming in from that particular counter. Apart from that, you have Make Money Organics that came out with its numbers. You have some corporate action that took place in Alok Industries, where the company is going to issue preference share issues to Reliance Industries. And on back of that, you have Alok Industries seeing a sharp uptick of as much as 6% as we speak. So a lot of stocks actually to talk about in the next 1 hour, isn't it, Shrishti?
Well, yes, we'll try to keep a track of all these counters, but for now, good gains coming in for select stocks. So the benchmark indices are definitely underperforming, but the breadth of the market as of now is quite even, Steven. Almost 1,000 stocks on NSE we can see gaining, and 1,000 are declining on the other hand. But we will connect with the management. But for now, Bank Nifty is actually down 193 odd points, and Nifty 50 is actually down 40 odd points as of now. But with this, onto this edition of Market Fatafat, let's move on and let's connect with our team of expert as well as researchers. Onto the technical side, we are being joined by Kunal Bothra, and on the research side, Vamakshi as well as Ansh are joining us on the show. And we will highlight all the counters that are buzzing in trade, either on the back of the news flow or on the back of the technicals. And starting with Divi's Lab first. This particular counter was a result candidate yesterday, and today we are getting to see the brokerage reports, wherein Jefferies today has come in with a report where they have downgraded this particular counter to a hold from a buy rating earlier. And not just that, they've also cut the target price from 4,300 earlier to 3,510 rupees as of now, very near to the current market price. What they highlight that the Q2 this time was a big miss. The major growth drivers 1 year away, and the pricing pressure and the higher operating expenditure led to the margin contraction, and actually came in around 25%. The key growth drivers to trigger only in the second half of FY25, quite a long time from now, and because of all these factors, they have actually cut their FY24 to 26 EPS estimate by 15 to 18%. Nevertheless, the pharma is in flavor today. Divi's Lab at one point in time was down about 2%, but still holding itself in the red.
Alright, moving on, let's talk about another earnings candidate. Monte Carlo also came up with their numbers yesterday. If you look at the consolidated revenue on a year-on-year basis, there was a decline of approximately 14%. The numbers came in at around 212 crore rupees. If you look at the PAT, a sharp downtick coming in for the PAT number. 56% downtick coming in on a year-on-year basis. The profit was at around 13.3% versus 13.3 crores versus 30.3 crores on a year-on-year basis. EBITDA margin also was down by about 437 basis points, coming in at around 16%. EBITDA also saw a sharp downtick on a year-on-year basis. On back of a poor set of number, you can see what Monte Carlo is doing in trade today, actually down about 8% as we speak on back of poor set of numbers.
Okay, but with this, let's move on. One stock that is definitely flying high, that is HAL. Kunal, tell us how the chart's looking like.
Well, it's a very attractive chart for HAL. In fact, the stock, which is typically a low beta stock, is showing signs of a V-shaped recovery, and that's very rare kind of a phenomena for stocks in charts like HAL. The stock, which was trading at I think 1800 odd mark just about few trading sessions back, has now managed to break past about the 2000 level. So more than a 4% to 5% up move for HAL, which you've seen today. The stock breaking past about 2000 levels momentum coming back into the stock, and I think that's trickled into the other stocks from the defense space. So looks very attractive for HAL, the near-term setup. The previous highs for the stock was around 2100, 2200 to 2200 range. I believe that the next set of targets on the upside should be a potential breakout above this 2200 odd mark. So expecting another 10% up move for HAL, possibly in the next 1 to 2 months.
All right, so that is HAL for you, but let's again put the spotlight on Dhanuka Agri-Tech. Like I mentioned, strong set of numbers coming in for that particular counter in the quarter gone by, but let's exactly understand what actually led to such a beat coming in for the quarter gone by. We have Mr. M.K. Dhanuka, who is the Managing Director at Dhanuka Agri-Tech, joining us right now on the show. Very good afternoon to you, sir. Thank you so much for joining us on ET Now, this channel on the other side. And firstly, congratulations on a healthy set of numbers in the quarter gone by. If you look at the PAT, the revenue, even for the matter of fact, if you look at the EBITDA performance, strong performance on a quarter-on-quarter as well as on a year-on-year basis. If you tell us what exactly led to such a beat for your company and for your company in the quarter gone by.
Actually, July, we had very good monsoon. So July month went very well. And we had product mix, high profit margin products were sold more. That has helped the company to improve its margins.
Okay, so high product margins products definitely helped your earnings. Hi, very good afternoon, Mr. Dhanuka. This is Shrishti also joining in. But looking at your margin performance, that has seen a substantial jump, not just on a YOY basis, but on quarter basis. That's really great. But do you believe that these margins are going to sustain in the second half of the financial year as well? What's the outlook?
The performance of the first half, we would like to replicate the same performance in the second half of the year. That means for the whole year, whatever is the performance for first half, that will continue to remain by the end of the year.
Right. Mr. Dhanuka, let's talk about the domestic demand trends. Are you seeing any short-term impact on the fact that there are some slowdown in Rabi sowing in certain states due to a deficit of rainfall? No doubt you did mention that good monsoon, normal monsoon led to the beat in the performance, but are you witnessing any slowdown or any sort of otherwise demand trends, headwinds that you're facing by any chance?
You are right that because of the less rainfall during the winter season, the Rabi sowing is less and it has been impacted in few states. We are waiting for the rainfall. Wherever the irrigation facilities are there the sowing is in full swing. We don't face any challenge. But where is the rain-fed areas, there the rainfall is required to have the good agriculture over there, and consumption of pesticide will depend on the winter rainfall.
Mr. Dhanuka, the company has been really focusing on the new product launches. So if you can just tell us that in the quarter gone by, were there any new launches, and in the second half, what sort of a development we can expect on this front?
Yeah, recently we have launched one 9(3) product, which is first time launched by Dhanuka in India. That is Tizome, which is a maize herbicide to control all kind of weeds in maize. We hope in maize it will perform very well. And another product was Semacia, which is a P2P product and which controls the leopard reptile pest in most of the crops. So these were the two molecules which was launched in the last quarter.
Right. If you could tell us what's your current position when it comes to the channel inventories? Have they actually come down? And also we did touch upon briefly on the fact that what sort of a margin and volume outlook you have for FY24. If you could tell us also about the revenue aspects for it.
The inventory has come down in comparison to the September 2022. Around 40 crores inventory has been less. So that is one reason is volume wise maybe the inventory will be same, but because of the reduction in the prices, the value of the inventory has reduced by 40 crores. So that was one part. And what was the second question?
Your revenue growth aspect for the FY24, we did touch upon volumes as well as margins. What sort of a growth outlook do you have for the remainder of the year?
For the whole year, basically, as for first 6 months, we had around 5.5% growth. So, considering the present condition of the rainfall, we expect a single-digit growth for the whole year for the value-wise. But volume-wise, we hope that we will be able to deliver double-digit growth for the whole year.
Okay, Mr. Dhanuka, with this we let you go on that. Thank you so much for joining us today on ET Now and helping us understand what supported your numbers this time and what is the outlook going ahead. So that was the management of Dhanuka Agritech, hoping for a double-digit volume growth for this financial year and positive on the demand outlooks as well. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back. Welcome back to Market Fatafat, a show where we are highlighting all the counters that are buzzing in trade as of now. And continuing with the same, let's go across to Vamakshi to understand why she has picked up Repco Home and why this counter is in focus.
Well, Srishti, this counter is in focus on the back of its numbers. A good set coming in from Repco, and that is the reason why the stock is surging nearly 8% higher in the trading session today. When we look at the overall loan book, it stood at 12,922 odd crores. Now, this is an uptick of almost 7.1% on a year-on-year basis and nearly 2.1% sequentially. Net interest income has also seen an uptick of almost 23.6%, standing at 170 odd crores. PPOP seeing an uptick of almost 17%. Net profit has, however, has seen a very marked improvement of almost 38% on a year-on-year basis. Not just that, when we look at the return ratios, the return on assets stands at nearly 3.1% as compared to 2.4% earlier. So definitely an improvement is what we're highlighting over here. As well as when you look at the asset quality, now that has also seen a marked improvement. GNPAs now stand at 4.9%, while NNPAs now stand at 2.2%. Apart from that, the board has also gone ahead and approved raising of nearly 250 odd crores and 200 crores through NCDs and commercial papers respectively on a private placement basis. So all in all, a good set of numbers coming in from Repco Home Finance, and that is the reason why the stock is surging in trade as of now.
Alright, moving on, Ansh, let's talk about Fusion Micro. Why is this in the spotlight?
It has achieved a robust 24% increase in interest income, reaching 497 crore, whereas profits also demonstrated strong growth, totaling 125 crore, marking a 32% increase from previous year. Pre-provisioning operating profit also stood at 241 crore, indicating a substantial 29% growth here. Company also showed improvement in asset quality, with GNPA decreasing to 2.7%. NNPA also improved. However, despite of all the positives, the number seems to have failed to impress the market. The stock is down by over 7% today. Also, the AUM has grown at a slower pace actually as compared to the previous quarter. Last quarter, it was up by around 31%. This time, it is up by around 24-25%.
Okay, moving on, and Kunal, coming to you for our first counter, that is Tata Elxsi. Tell us how the chart's looking like for this one.
Yeah, so I think Tata Elxsi is now starting to get into that strong breakout mode. So what started off in the last couple of days was a minor rally from 7,500 levels. Today the stock has managed to break past about the 8,000 mark as well. So a good 500-600 point rally for Tata Elxsi over the last 3 days, and this has resulted into the stock getting into a multi-month up move or multi-month breakout, breaking past about that psychological 8,000 mark. So looks very attractive as a setup. The stock is forming a bullish flag formation on the weekly as well as on the monthly charts, and with the swing breakout on the monthly time basis, I believe Tata Elxsi could now start to look a lot more attractive than what it has been over the last many months. The previous high for the stock, or the major high rather for the stock, was around the 10,500 mark, I think in second half of 2022. I believe that in this leg of uptrend and with this bullish flag pattern formation, the stock can start to look very attractive and head towards that kind of a target range for itself.
Alright, moving on, let's talk about Honasa Consumer, and that particular counter is in focus on back of its listing on the bourses today. If you look at Honasa Consumer, that is the parent company of Mama Earth, actually listed on the bourses with a mild premium of approximately 2% or so. As you can see on your screen, the stock is now trading with gains of about 2.5%. You have a slew of companies hitting the bourses. Remember, yesterday you had Cello World's listing, which listed at a bumper premium approximately 29%. Today you have Honasa Consumer, parent company of Mama, that's listed with a premium of about 2% to 0.5%, where it's trading at currently.
Okay, moving on then, and Kunal, the oil and gas space is really buzzing in today's trading session. From the pack, IOC, which is up 4%. Today is what is on your radar. Any signs of breakout?
So the stock has already confirmed a breakout on the charts. I think 100, 102 was the previous highs for IOC, and we were discussing this yesterday that it's very rare to see such kind of a low beta stock, or rather an extremely low beta stock, to get into a big breakout. Now the only concern with stock like IOC is because on the early charts, on the short-term time frame, the indicators are now extremely overbought. So the RSI, for example, is almost at 88 to 90 levels for IOC and even HPCL, BPCL. So which means that we could now be getting into a zone where at least over the next couple of days there could be a mild correction. But with such kind of a breakout, the chart prospects, they improve significantly on the weekly, monthly time frame. So mild corrections should be bought into for stocks like IOC.
All right, Kunal, actually staying with you, let's talk about NAM India. How is this one looking at the charts there?
And NAM India is also one of the stock which I recommended yesterday. The stock heading towards a breakout, a flag formation on the charts, breakout the previous swing high of 400 for NAM India, and it's been a very clean kind of a stock, at least in terms of the chart patterns. So for Nippon Asset Management, the stock has given a very strong recovery from the 2020 lows. Even the last 4-5 months from the March lows, the stock had looked very attractive. Very mild correction in the last 1 month when the mid-cap index was going through a sharp correction, but the stock has made a fresh swing high for itself. That indicates the strength of the trend for NAM India. So would suggest a buy at current levels and expecting 440 to 450 as a target range.
Okay, moving on, and Vamakshi, tell us why Indocount is in focus today.
Well, Srishti, this counter is in focus on the back of a stellar set of numbers that the company has reported in the second quarter, and that is in fact being reflected in the kind of move that we're seeing in the stock today. The stock as of now is up nearly 7%. Now keep in mind that the company has reported the highest ever quarterly revenue, EBITDA, as well as quarterly volumes. Now when we look at the revenue, it stands at 1,009 crores, and this is an uptick of almost 20% on a year-on-year basis that the company has noted. In fact, this is the first time ever that the company has surpassed the 1,000 crore of revenue mark in any quarter. Not just that, when we look at the volumes, they've grown by almost 23% on a year-on-year basis in the first half. When we talk about the net profit, that has also seen a marked improvement of almost 70.5% on a year-on-year basis, and net profit now stands at 114 odd crores. Now, the company also, in fact, went ahead and revised its volume guidance upwards. They've given a volume guidance of almost 100 million meters as compared to 90 million meters that the company had given earlier. So all in all, a good set of numbers. The management has gone ahead and upgraded the volume guidance, and that is the reason why the stock is surging in trade as of now.
All right, that's Indocount for you. That is surging in trade today. But on that note, we'll slip into a break on this edition of Market Fatafat. More stocks to discuss on the other side. A lot of earnings coming in as well. We'll take a short break and we'll be back.